The new Black Wall Street. Do it right, build wealth, build life, economic empowerment, real tips, insight on the new Black Wall Street. It's on the new Black Wall Street. It's your host.
Oh my beautiful people, man. Grand rising to you, billionaires. Thanks so much for joining us here today on the Money and Power Show. Got black folk talking about money and the markets in the morning. Oh my God, where do they do that at? I'm your host, ERGJ, your certified financial educator, CEO of ERGJ Enterprises, ERGJ Black Bazaar, and also international bestselling author of the book, The Black Billionaires Club. The study of black wealth is the study of the 12 richest black people in the world today and how they built their wealth. And I just believe that if you want to be wealthy, you should study wealthy people. Well, guys, not only is it a book, but it's also a club that you can choose to become a member of today. That's right. Membership is open for the Black Billionaires Club. You can learn what the billionaires do and then apply it into your life and have similar success. Well, what do we do there, guys? Well, a lot of benefits available to you, and we're adding more as we speak. But for as little as $9.99 a month, you can get your financial literacy classes. You can stop complaining about what they're not teaching in public school. You can learn from us. We can teach you about money, right? We can teach you all the concepts, things you need to know about money. Also have a new Black Wall Street book club where we dive into, because what do billionaires do, guys? Number one thing that they do is read. So guess what we're going to do? We're going to read and do what they tell us to do. They said investment in knowledge pays the best interest. Right, got personal development mastermind group to help you become a better version of you, help you be the best you. You say, I'm living my best life, ain't going back and forth with you. And we got business development mastermind group as well to help you to start that business you've been talking about forever, or actually help you scale up on the business that you already have going on. That's right. That's for a little $99. You take a step up though, you're gonna get money making opportunities in our club. We'll give you an opportunity to add you a stream in 2019. Everybody put also add me a stream. Give you an opportunity to add you a stream in 2019. Hey, it's only so much you can cut out as far as your expenses is concerned, but there's unlimited opportunity for you as far as you making more money. Not only that, guys, got investment club eligibility for you. You can join our investment club. We're going to be teaching you how to make your money work for you. We're going to be teaching about real estate investing. We're going to be teaching you about stock market investing as well. And guess what we're going to do? We're going to invest and build together. Yeah, that's what we're going to do, man. So you choose, man. Here's the deal. You can choose to join. You can choose not to join. Either way, I'm okay with that, okay? I'm okay with that. Just simply go to www.theblackbillionairesclub.com, www.theblackbillionairesclub.com, and join the club today. Well, guys, it's a magnificent Monday, by the way. Why don't you go ahead and let us know exactly where you're connected from, what city, what state. Rep your city right now. We're broadcasting right here from Atlanta, Georgia, ERGJ Studios. Actually, Decatur, where it's greater. That's where we are today. And then also hit that like button, that share button, that watch party button, and make sure that you hit the follow button on Facebook if you're there, or the subscribe button on YouTube if you're there, so that you can know when we're going live. We do this every morning, by the way, Monday through Friday, 7 a.m. But you might need to be reminded. You might need a little notification to go off over your phone. Say, oh, they're live. I better jump on. All right, so go ahead and do that for us, man. Good morning to you, Miss Melanie Peters. Thanks so much for joining. Mr. Mark Daines in the house. Mr. Mark Daines in the house. Miss Vivian Reed has joined us. Miss Julie Pierce from Saginaw, Michigan. Thanks so much for joining us as well, man. We are reaching all people all over the country. Black folk talking about money. Now, one of the things I want to start with by telling you guys, we got an excellent show, by the way. We're going to be talking about it. We got a billionaire breakdown. We're going to look at the ninth. We're going to look at a black CEO of the 9th largest black-owned business in America today. We're going to be talking about 10 commandments on retirement today as well. So you better hit that share button, let people know we're here, because we're giving the game away for free, and they still won't buy it. Isn't that something? We're giving the game away for free, and people still won't buy it. They'd rather complain about their problem and actually tune in and get the solution to it. That's kind of crazy, don't you think? Charleston, South Carolina is representing Miami, Florida. Oh my goodness, that's why all the bosses live at. Ain't it? Brooklyn, New York is representing as well here this morning. So we got a wonderful show. Now, I wanted to share with you a thought before we get into our show. As I was thinking about this morning, I want you guys to understand this. Really simple. Black wealth is a black choice. Everybody put that in the comments below. Black wealth is a black choice. We either going to choose to build wealth or we're not. It's really just that simple. I know we want to make it more complex. We want to put all the onus on somebody else and all the past and all that stuff. It's 2019, people, grow up. Black wealth is a black choice. Here's my question to you. What do you choose? What do you choose? See, you can learn what you don't know about money. You can learn that just like you learn anything else that you want to learn. The question is, do you want to learn it? That's the thing. Do you want to learn it? All right? And then if you decide, yeah, I want to learn it, well, then you got to figure out, well, who am I going to learn it from? And you may not want to learn it from me. That's okay. But who are you going to learn it from? Because somebody got to teach you, because they're not going to teach you in elementary. They're not going to teach you in high school. They're not going to teach you in middle school. They're not going to teach you in college. Your job ain't going to teach you. So the church ain't going to teach you. So you got to go somewhere where you're going to learn. You have to decide. See, this is one of those decisions that as an adult, you realize, okay, I'm going to have to figure out where I'm going to go to get the information I need to know so I can make sure I make the right choice as relates to building wealth. Black wealth is a black choice. $1.1 trillion in spending power, but we don't spend it with each other. That's a choice. Letting all our money leave our community. That's a choice. Don't you know back in the early 1900s, there was a thing called Black Wall Street? They didn't have many choices, but they chose to work together. And now it's 2019, and we can't choose that. We got to wait on somebody to offend us before we start buying black. That's crazy. I mean, that is absolutely sick, boss. We got to wait on somebody to offend us before we start supporting one another. That's really sick, by the way. Anyway, let's get right into our show today. I'm not going to belabor the point. You guys get the point. Black wealth is a black choice. All right. Where do we want to start at today? I think we should start with our billionaire today. We're going to do a little backwards today. We're going to go a little backwards today. And we're going to start with our billionaire of the day. Now, it's very interesting. I didn't know this was going to come up this way. Number 30, the 30 richest person, family, whatever you want to call it, in the world, Francois Pinault and his family. He's worth $30 billion. Okay? Now, I didn't know this was going to work out this way. I tell you, I did not set this up. I just go in order. I started at 1, while we on 30. Who is he? Well, Francois Pinault founded French luxury brands group Kering in 1963. About 50 years ago, which originally started as a wood and building materials company. So he started a company in 1963 or early 1963, and it started as a wood and building materials company. Then guess what happened? He realized, okay, this ain't working. In 1999, Pinault changed the direction. Everybody put in council change. You can choose to change, just like he chose to change the direction of the company. You can change your direction today. You can go from poverty to prosperity. You can change the direction from poverty to prosperity by just choosing to change. I'm telling you, I recommend it. I recommend it. Okay? So in 1999, he changed the direction of the business and started going towards luxury goods when he bought a controlling stake in what? Gucci. Oh, isn't this interesting? I didn't know this was going to play out like this. I'm telling you, I really didn't. I'm not setting you up. In 1999, he decided, okay, the wood material building company, that ain't working for it. We're going to go in another direction. We're going to start giving people what they want, which is luxury brands. Now, Kering owns fashion brands, Saint Laurent, Alexander McQueen, Stella McCartney, to name a few. The group also owns sports brand Puma. So now you know when you spend your money in these places where it's going towards the net worth of this brother or this man here, Mr. Francois Pinault. The $19 billion estimated sales company is run by Pinault's son, Francois here. He keeps it in the family. Everybody puts it on keeping it in the family. When it comes to keeping it in the family, he's keeping it in the family. You want to talk about inheritance for your children's children? That's going to come through business. You want to talk about inheritance for the next generation? That comes through life insurance. But you want to talk about inheritance for your children's children? That's through business. The family business. Keep it in the family. Oh my goodness, man, this brother's really talking about something this morning. I mean, my goodness, man, you need to tell me a black man is pretty educated when it comes to this thing called money. Well, yeah, I've been studying it for a while. Long time of study. Now I'm sharing it with you for free, and people still won't buy it. That's something else. Pinault and his family own a 3,000-piece art collection with works by Picasso, Mondrian, and Combs. They plan on opening a museum in France in 2019, so they got collectibles. What are collectibles? If you got good collectibles, those are called assets. Art collection. All right, his source is well self-made. Didn't get it passed down to him. He built it himself. He started himself. He got started. Now he's up in 1963 he got started. So it only took him, what, 40 years? 50 years? Roughly about 50 years to build an empire? A $30 billion empire in 50 years? Look at this. Dropped out of high school. Now, I'm not recommending that you don't go get your education. It just matter what education you go get. He's a $30 billion man without a high school diploma. Everybody put a console, wow. He's a $30 billion man, but he doesn't have a high school diploma. Does that make anybody scratch their head? Wonder just a little bit. Wait a second. We keep pushing formal education, which is fine. This help you make a living, help you get a job. Formal education make you a living. Self-education will make you a fortune. This brother decided whatever happened in high school, whatever, he dropped out. He didn't get his high school diploma. He's still 50 years later a $30 billion man. So I don't know who I might be talking to today. You might not finish high school. Guess what? It's not over for you. It don't have to stop you from building. Doesn't have to stop you from growing. It doesn't have to stop you from your dreams. It didn't stop him. Huh? A $30 billion man who dropped out of high school. He doesn't even have a diploma, but yet we keep pushing degrees. Not that we shouldn't have them. Not that you shouldn't go for a higher education. I just wonder what higher education. You'll find when you start reading and you start going through these bills, you be like, man, most of them didn't even finish college. But yeah, that's what we push. That's not what we push. That's what society pushes. I wonder why. So we can go work for them. Pinault and his family also own Auction House Christie's, several vineyards, a French soccer club, a theater in Paris, and a luxury yacht and expedition company. Pinault's son, Francois Henry, is married to actress Selma Hayek. Okay, Selma got her sugar daddy. Okay. All right. So, again, guys, the 30th richest man in the world, person in the world, according to Forbes. He's a $30 billion man. He dropped out of high school. Doesn't have a high school diploma. He didn't let it stop him. What's stopping you? Oh, my God. You mean to tell me I'm asking you to take personal responsibility for the results that you have in your bank account? Yes, I am. It didn't stop him. What's stopping you? All right. That is our billionaire breakdown of the day. Now we need to take a look at our, what are we going to take a look at now? We're going to take a look at our Black-owned business spotlight. Hit that like button, that share button, that invite button. Let people know that we're here. We're Black folk talking about money in the morning from Black Enterprise. They come out with an article every year on the top 100 Black-owned businesses in America. And we're making our way through this list. Number 9. Number 9, the 9th largest Black-owned business in America is called Thompson Hospitality. It's based out of Reston, Virginia, and it was founded by a Black CEO named Warren M. Thompson. This type of business is a food and facilities management company, quick service restaurants. They have over 3,000 employees, and they made over $650 million last year in 2017. Let's take a look at Thompson Realty. So first we'll take a look at Thompson. All right, here's the timeline for Thompson Realty. 1992, looks like they got started. It's simply what you do in your life that matters. It's who you are. So I guess Fred Thompson Sr. maybe started it. I don't know. Let's see. This is a creator of Thompson patriarch and teacher Fred Thompson Sr. This is how his children, Warren, Fred, and Benita, have chosen to lead this company. Okay, since its founding in 1992. So this company was founded in 1992. This is the 9th largest Black-owned business in America that nobody's talking about but us. What we do every day is a service. Our many clients, customers, and communities across the country recognize as Company of the Year in 2010 by Black Enterprise Magazine. We're a company whose performance is guided by 5 simple standards. Number 1, we provide the highest quality services. They maintain flexibility to better serve our client, be accountable for our actions. Oh my goodness, this is a company philosophy. Celebrate diversity and give back to our communities. This is what they stand for as a Black-owned business. All right, in 1993, they entered the food contract service arena. 1997, they formed a strategic partnership with Compass Group. 2003, they made their first acquisition. They acquired a company, Campus Chefs. 2006, they acquired another company, the Austin Grill chain. 2007, they entered the facility services market. 2008, they opened an American tap room, whatever that is. 2010, they were given the Company of the Year award by Black Enterprise. 2011, they launched BRB Right Burger. Okay, BRB Burger. 2013, ranked number 7 on the list. 2014, ranked number 8 in the Food Management magazine. 2015, they opened Willie T's Lobster Shack. 2018, they opened Hen Quarter Restaurants. They launched Hattie Mae's Hen Penny in 2017 as well. They were named the #1 minority-owned company in 2017 by the Washington Journal. 2018, they backed Maxbox Vintage Pizza Bistro. If y'all eat in any of these places, this is owned by Black business. All right, in 2018, they acquired, or Matchbox became a part of their group. Again, they are food services and delivery. Okay, now let's take a look at the Black CEO himself. The Black CEO himself, the founder and Black CEO that nobody's talking about but us. Mr. Warren M. Thompson, by the way, that's him right there. That's my homie. We salute you today, Mr. Warren Thompson, right? The Black CEO of the ninth largest Black-owned business in America. Okay. All right. Mr. Warren Thompson learned at an early age the importance of hard work, focus, and determination. He started his career at age 14 with a grass-cutting business. How many guys are letting your children start businesses when they're young? Yeah, he's cutting grass at 14 years old. Landscape Lowry. Little consideration there. Get some of these kids and give them a job. Let them take some ownership of that landscape business. Cutting grass. You can service communities, multiple communities, if you get enough people to cut the grass. It's up yourself. Become the owner of the business, not the operator. Oh, let me say that again for the people in the back. Just be the owner, not the operator. Get kids in the neighborhood, give them a job, give them something to do, make some money, right? All right, anyway. Graduating, delivering, and selling produce out of a school bus at age 15, and his first leveraged buyout at the ripe old age of 16, purchased a family hog business from his father. So his father had a business. He decided he was going to learn, but he was going to follow after his father. This is why we need more fathers in the home, by the way. You know, our family, you know, the separation of the family between the mother and the father, man, has a big impact on our community, by the way. His parents, both educators, stressed the importance of education. Warren used the proceeds from the family's hog business to help finance the managerial economics degree he received from Hampton-Sydney College in 1981. Warren then attended the University of Virginia's Darden School of Business, where he received his MBA degree in 1983. Now, notice this. It's great that you get all these degrees, but shoot, we over here celebrating a man that's got that. On one hand, he dropped out of high school. He's a $30 billion man, but yet we got to keep talking about degrees and letting that be distinguish who you are. I'm to the point where I understand that degrees do not distinguish who I am, or degree or no degree. It's great to put on a resume and say you got a degree, but at the end of the day, I've never had to show a degree to get a job, or I've never had to show my degree at all for anything. Nobody's ever looked it up and said, well, did you really graduate? Anybody else? You got it framed. It's for you. It ain't for nobody else. It just say, oh, you completed something. Upon graduating from Darden, Warren joined the Marriott Corporation as assistant manager at a Roy Rogers unit. Having spent 9 years with Marriott, Warren's entrepreneurial spirit could not be contained any longer. Starting with a $100,000 personal investment. Nope. He said he saved up $100,000. Warren pursued his vision of becoming a restaurateur and created Thompson Hospitality in October 1992. He said a personal investment of $100,000, not a personal loan of $100,000. Uh-oh. You mean tell me you might have to save to you might have to decide to save in order to finance your dream. Uh-oh. Oh my goodness, that's gonna take some discipline, some self-control. They're gonna have to decide that you're gonna stop hanging out with all the people that want to spend all your money. You start getting around people that want to help you save the money. Uh-oh. He expanded the company's interest into a contract food service area in 1997, created Thompson Hospitality Services, LLC, by forging a strategic partnership with Compass Group, the world's largest food service company. Warren has been recognized for his commitment to promoting diversity in business, as well as his philanthropic efforts. He sits on the board of directors for several major corporations, including Compass Group North America and Federal Realty Investment Trust. Today, Warren leads the nation's largest minority-owned food and facilities management company, Mr. Warren M. Thompson, Black CEO of the 9th largest Black-owned business in America that nobody's talking about except here on the Money and Power Show. Hit that like button, that share button, let people know that we're here. I found this article here from Mr. Warren Thompson, right? Leading the country's largest foods and facilities management. How many guys want to get into food and facilities management? All right, this is probably who we want to learn from, huh? 20 questions they asked Mr. Warren Thompson, right, about hospitality. Oh, what was his first job? We talked about that. What's the best advice he'd ever received? Find out what you're passionate about, and you'll never work another day in your life. Find out what you're passionate about. I found what I'm passionate about. Have you? And you'll never work another day in your life. My father also told me that I could do anything in the world that I wanted to do if I was willing to work hard. Man, his father told him that. That's why we need more dads in the household. We need a dad and a mom to work out their differences for the betterment of the kids. We need some humble pie in our household. A whole bunch of humble pie will do us good. A slice a day to keep pride away and ego at bay. A slice of humble pie a day to keep pride away and ego at bay. Oh, don't shout me down because I'm preaching good. Who do you admire most? My father. My father was my best friend. My father was my mentor. My father was my confidant. Oh, yes, it's Male Empowerment Day. That's right. It's Father Empowerment Day here on the Money and Power Show. What motivates you, Mr. Thompson? When I started Thompson Hospitality, I had 3 goals. Number 1, he had goals. That's big enough. To take care of my parents. That was one of my goals, man. I wanted to take care of my parents. Number 2, I to make it a family business. Whoever said, put it in the comments below, keep it in the family. And number 3, give back to the community. The third one was an open-ended goal that I could never check the box and say I can't do anymore. I've always said it's important to have at least one open-ended goal, and for me, it was giving back to the community. When I say community, I would describe Darden as a part of my community, but also in particular the African-American community. It's a part of the community that I continue to owe a lot. When and where do you do your best thinking? Well, when I'm driving, because I'm typically not on the phone, I do quite a bit of driving to various restaurants or accounts we own or operate in Washington, D.C. What's been on your mind lately? Well, what is happening in our country now in terms of becoming more divisive? The country is so divided, it makes it more difficult to make progress. I think we actually are going backward. That weighs heavily on my mind in terms of what we can do and how long will it last. Uh-oh, what are you reading these days? Ask the black man what he's reading. A Stroke of Faith by Mark Moore. I guess we need to add that to our list. Miss Vivian, if you're here, make sure you inbox me about the Stroke of Faith. We're going to add that to our... I'm going to read what billionaires read and millionaires read, successful people read. I ain't never heard this book, by the way. But if Mr. Warren Thompson, the black CEO of the 9th largest black-owned business in America, says he wrote Stroke of Faith, well, by golly, I'm going to read Stroke of Faith. He's actually one of my closest friends. It's about a very successful African-American business owner who suffered 2 strokes and had to learn how to do everything over again in life. It brought him to a very difficult reality of what's important. That looked like that might be a good business book or a good personal development book. A Stroke of Faith. Everybody put in that comments below. A Stroke of Faith. I got to remember that. I'm going to add that to my wish list. What technology can you live without? My phone. What's your motto? These are great questions, by the way. It's very simple. Do the right thing. Do the best you can. Treat others the way you like to be treated. It's the last principle of our guiding principles as a company. Okay, well, what characteristics do you look for in people, Mr. Thompson? Well, we try to look for people who have some of the same characteristics as ourselves. For me, it's a person who's entrepreneurial. In almost every interview I do, I will ask the person, are you comfortable in a corporate environment, or are you more comfortable in a corporate environment or an entrepreneurial environment? Most will think I want the corporate answer because they're interviewing with the company, but I'm looking for a person who's willing to take a calculated risk in order to get success. I think that's the best person to manage a piece of the business. How do you measure success? I measure success in terms of long-term stability and growth. In my mind, anybody can make the budget for one period or one quarter or for 1 year, but how do you grow a business over 3 years or 5 years? In my mind, success is steady growth. Everybody putting it on so steady growth. Steady growth. Yielding the expected results during that time is also, in my mind, beating the competition. You're hearing how a black CEO of the ninth largest black-owned business in America, you're hearing how he thinks. What's your favorite cause? If you could live anywhere, would it be? Who do you lose sleep over? Look at this. Today is more about legacy and thoughts of what will happen when I can't run the company anymore. That's what he loses sleep over. I'm trying to position the company for proper succession because time flies by and we're coming up on 26 years. It's something I have to think about more and more as there are friends that I lose and peers pass away. It's called a succession plan. Not many black businesses aren't even thinking about that. What's going to happen when I die? What's going to happen to the business? How do I put the business? How do I put my family business, which is not just necessarily a business like this or corporation, but your household? How do you what's the succession plan for your household when you die? You got to start planning for death and succession. Now you got to start planning for it. Now everybody putting guys on now. Now we're going to be talking about retirement today, by the way. Now is the time to start planning for when you die. Because you know you're going to die. That's one thing that you can't avoid that. You can't avoid that part. So anyway, you guys can read this article if you like. I think that was a good article. Anyway, again, Mr. Warren M. Thompson, black CEO of the 9th largest black-owned business in America. We salute you today, sir. Keep leading the way, and we're going to pick up that book, A Stroke of Faith. We're going to read what you read. You said you read that book. Guess what? I'm going to read that book. Why? Because I want to have the kind of success that you're having, sir. And so if you said you read that book and it helped you, well, God is going to help me, and I'm going to read it. Hey, see how we do? That's how we do at the Black Billionaires Club. If you're part of BBC, go ahead and put in comments on hashtag BBC. People still haven't joined, but yet they're still complaining about their life, still complaining about being broke, but won't get with winners. Nope, that's true. That costs too much. No, I'm telling you, it costs too much not to get with winners. All right, now let's get into the what y'all want to do next? Stock market or the retirement? Which one? Let me see here. Take a vote. Y'all want to do stock market or retirement next? Let me know. Stock market or retirement? Let's see here. Taking votes right now. Stock market or retirement? See what y'all say. Black folk talking about money in the morning. Who'd have thunk, man, a show like this would be available? Oh, in case you guys don't know, I am working right now. I just got approached for a TV deal for this show. So, who knows? We'll see what happens. But yeah, my good Lord is enlarging our territory here. Okay, that's what's coming down the pipe. I'm waiting on somebody to tell me something. Stocks. Okay, somebody says stocks. All right. BBC. All right. Okay, we'll go to stocks. All right, stocks it is. Of course, I got stuff to do, man. Get to it as soon as possible because I might have to move and I don't want to miss this. All right. So stocks. All right. So here's the stock market, man. Let's see what happened yesterday. Not yesterday, Friday. We're going to actually be taking a look at Nike today, by the way. I was at oh, you did? Oh, I didn't see that one. Okay. Make sure you inbox it to me. I'll talk about Nike in a second. So the Dow was down 63 points yesterday. The NASDAQ was, not yesterday, on Friday. The NASDAQ was up 9.85 points, and the S&P was up 1 point. So no real big movement. The Dow down 63 points. The Dow is the index that houses the 30 most significant stocks in America. The NASDAQ is the index that houses most of your technology stocks, and the S&P 500 is the index that houses 500 stocks, and it's considered to be the benchmark. This is where you want to start looking at your retirement accounts, see how they're performing, and then measure your success based upon the S&P 500. If the S&P 500 is up for the year, you should be up for the year. If it's down for the year, you're probably going to be down for the year. But you want to measure you want to track your success and measure it according to a benchmark. So you can see, okay, well, am I even in the ballpark? I mean, I'm telling you, if you don't start paying attention to your money, then don't be upset when it's all said and done at 65, 70 years old and you flat broke because you simply won't pay attention to your money. It's your money. Here's the deal. I can't make you pay attention to your money. I can suggest it, recommend it, but I can't make you do it. I'm telling you, once oh, look at this. Oh, Lord. All right. So anyway, I got caught out. Look at this right here. So if you was with us on Thursday, you'll remember that we had a big downshift in a lot of the toy stocks and video game stocks. So on Friday, there was a bounce back. This normally happens if something goes down, and it will bounce back because it's just too big of a loss. So Cody look at this. Cody was up 32% on Friday, whatever Cody is. Okay. Mattel, which is, makes the Barbie doll and all that stuff, they was up 23%. Can you imagine if you would have invested in Mattel on the Friday morning and then you came back, your money had jumped up 23%? Electronic Arts was up 16%. This is in one day, by the way, people. This is one day. DX Technology and Mohawk Industries both up 7% and 6% respectively. Henry Schein, whatever that is, was down 26% for the day. That was on Friday. Goodyear, the tire company, down 9%. Haynes Brands was down 4%. Affiliate Managers Group and Acronic Inc. was down as well. Now, if you wanted to see more of these, you could simply click on gainers, and you could actually come and see a lot of the companies that were big gainers. So it just keeps going down. The big losers, you can see that as well. So they do have these lists as well. I haven't shown you guys that before. They do have the list. I just look at the top 5, bottom 5, whatever. And if I want to see more, I just click on that stuff. Here in sector performance, here's what's hot and what's not hot. And here's the sectors. And so utilities, which makes sense, right? Utilities actually the hottest sector right now. And this is where safe money kind of goes, because if something were to happen in the market, if there was a big shift, a big correction, if there was a big loss, if something crazy happens, people are not going to stop paying their utility bills. They still have to keep their houses warm and keep the lights on. So that's why utility companies are very safe investments. They're considered to be defensive stocks. Everybody putting down so defense. So you gotta see, this is a game. You got to learn how to play offense, and you have to learn how to play defense. Offense to build your wealth, defense to protect your wealth. Let me say that again for the people in the back. The people way in the back. Offense to build your wealth, defense to protect your wealth. And then after you finish all that, at the end of the day, you got to learn how to put this thing called life insurance into play so you can transfer your wealth, or a will, or a trust, all these things, so you can then transfer your wealth. You did a good job playing offense. You had a good quarterback, and then you had a middle linebacker who could stop everybody. So you was great on defense. And then now you had a Super Bowl winning financial team. And then now at the end of the day, you want to pass over your dynasty to your kids. That's going to be through life insurance, a will, or a trust. That's how you win 11 championships in money. I gotta talk NFL to y'all because y'all watch that enough, so I can talk to y'all in sports. Hey, commodities, guys, I consider this to be store of value. These are considered to be some store of value investments. Oil up 52.35 or down to 52.35 per gallon. Per barrel of oil. Gasoline $2.69 up a little bit. It was at 261 last time we looked. 269 per regular unleaded gasoline. This is across the country. Gold down just a little bit, inching right back on down to 1,300 per ounce. Silver 1,570 per ounce, down a little bit in corn. 373.75 per bushel. Okay. Here are your currencies in case you're traveling. Now, you can look at more currencies if you like, but just if you're in Forex, this is where you want to be. If you're in commodities, you want to be in commodities. You can trade. All this stuff is tradable. Okay. All this stuff is tradable. Meaning that I can trade my money for this, and then I can trade then that entity, that asset for other assets. And this whole trading process, this whole trading process can be used to build wealth. You know, I'm just basically trading something that's undervalued for something that's of value. I'm getting other people to pay higher for it over time. It's kind of I'm gonna have to explain it a little bit better than that, because I know that there's some people who's like, what the hell are you talking about? So let me give you an example. So here's what normal people do. They trade their dollar for 50 cents. This is called inflation. You may hold on to a dollar. You may get paid. You may hold on, put in your savings account. Then by the time that you use it, which could be a year later, it's worth less than what it was when you got it. So you're trading your dollar bill for actually something less than what it's worth, because buying power goes down over time. It's called depreciation. But when you learn about investing, you learn to then trade your dollar for $2. You learn how to double your money and triple your money and quadruple your money. 30% here, 10% there, 100% there, all this stuff. You learn how to make your money grow, because you plant your money is considered a seed now instead of a expense. You consider it a seed. You've planted somewhere. It grows over time, and then you reap the harvest. So what do I think about the Robinhood platform? Let me be nice here. Okay. So Robinhood, to me, in my opinion, it's I'm not going to say it's great. It's okay for starters. I think it's good when it comes to trying to establish a habit. Everybody putting comments on habit. Here's the problem, though, that I see it when I talk about establishing a habit. When you put something on autopilot, you're not establishing a habit. It's just that you have something on autopilot. It just means that you can forget about it and it's doing something on its own. But if you were to actually go in and make the trades, if you were to actually go in and feel the pain, if you actually go in and overcome the anxiety, you actually go in and actually do it and actually make a trade yourself, that to me is actually establishing a habit. Okay? So you can put something on autopilot, like your savings account, and it can just save automatically and just take $25 out of your checking account or $5 out of your checking account. Put it on autopilot. But when you actually go and move money from your checking account to your savings account, that's actually you actually putting some action in yourself that actually helps you establish a habit faster, right? So let me give you another example. I could actually do this show like I'm doing now, live every day, establishing a habit of going live every day. Or I could pre-record the shows all in one day and then have them scheduled to come on when they come on. But the habit of me going live every day won't be there. Although to you guys, it may be that I'm live. I'm not really live. So I think that Robinhood is great to get you started, if that's where you got to start at. Pennies on a dollar. But it's pennies. I mean, it is minute. Very minute. You're not going to get rich with Robinhood, okay? You're not really going to build wealth with Robinhood. Hate to tell you that. Because you're fractionally investing penny after penny. I mean, it all adds up. Don't get me wrong. But I want you to level up from Robinhood as quickly as possible. Everybody putting comments on level up. I'm saying get started. Robinhood, Acorns, whatever you want to call it. That's where you got to start. Start there. But level up as quickly as possible. I want you to level up from a penny to a dime, from a dime to a dollar, from $1 to $10, from $10 to $100. I want you to level up as fast as possible. If you stay on Robinhood, if you stay on Robinhood, now I'm just saying Robinhood, just talking about any of these apps. It's like drinking milk forever. And what does a good book say? That you're drinking milk, but it's time for you to eat some meat. Some of you guys need to drink milk. Get started. So I agree. I'm glad that we have something that can help people that have never been exposed to investing at all get started. I'm glad that there's an app that's now available to you that at least you can start looking at these things that we're looking at the stock market, looking at stock prices, all that stuff. So great to get started. Don't stay there. Does that make sense to anybody? I mean, there's a reason why my mentor says this. There's a reason why the kindergarten, there's a reason why the first grade desks are so small, because you're not supposed to stay there. You're supposed to grow. So when you go back, you're like, oh man, I used to sit in that chair, but you can't fit no more. You got to grow. So I don't know how long you know, and hopefully that helps somebody. Okay. That's just my take on it. Get started. When I got started investing, we didn't have these apps. Okay, so I'm speaking from a kind of biased standpoint because I had to go through the pain. I had to go through the pain. Woo, Lord. Anybody know what I'm talking about? When I say that, I got to go through the pain. All right, let's keep going. All right, here's how stocks are doing so far in 2019. The Dow's up 7.63%. That's 8% roughly. The Nasdaq's up 10% for the year. S&P 500 up 8%, which means simply that if you decided on January 1st of 2019, you made a New Year's resolution that you're going to become an investor, and you don't know exactly what you want to invest in, you just want to follow the market. Everybody putting on so follow the market. Well, then your money would have jumped up at least 7.563% if you just simply followed the market with your money. Didn't have to do anything else. Just follow the market. Didn't have to pick individual stocks. Didn't have to do all the research and stuff. All looking into stuff that I'll be doing here on the show. For some of you guys, you didn't have to do that. You just have to follow the market. You've been okay so far this year in 2019. Here's the emotion. We consider this to be sentiment. How the market, how people feel about the market. Right? How they feel. Now, how many guys know that people make decisions based on how they feel? They make financial decisions based on how they feel. I want to teach you not to do that. I want to teach you to make decisions based off logic, not how you feel. I'm telling you, when you make investing decisions based on how you feel, you normally end up broke. You start making investment decisions or money decisions, period, based on what makes sense, you'll be all right. Now, here's the beautiful thing. You don't have to decide whether it makes sense by yourself. You can join something called the Black Billionaires Club. You can get with a group of people that can help you make sense of it all. Everybody put in the console makes sense. I want you to understand that common sense isn't so common anymore. So the way that people feel is important, especially when it comes to spending money, keeping money, earning money, investing money. Money is not emotional by itself. It's people who make money emotional. Now, my good mentor, the man who taught me the third richest man in the world, told me to be fearful when others are greedy. I should be scared when they're greedy because they don't know what they're doing. That's the crowd. I don't follow the crowd. I do the opposite of what a crowd does, and I end up winning with money. I mean, you just simply do the opposite of what everybody else is doing. They're spending, you save. They're partying, you study. If you simply do the opposite, you know what? My assistant hit me up today. She said, she said to me, you're simply amazing. You know what my response was? My response was, me simply doing what I was called to do makes me amazing. I think that's very odd. Shouldn't that be normal? Shouldn't that be normal that you do what you've been called to do? That should be normal, but it's not normal. It makes you extraordinary simply by doing what you've been called to do. Isn't that interesting? Because most people won't do it. Anyway, y'all get me off task. See, that's why I didn't want to get in the stock so far. Okay, let's keep going. All right. So that's the thing. So it's greedy right now, guys. I'm a little hesitant. I'm looking at stuff. I'm making sure it's on sale. We're gonna take a look here. We're gonna dig in the Dow now. We're gonna dig in the Dow. we're going to take a look at the wonderful company called Nike. Now, why are we going to look at Nike today? So I went to a fitness grand opening yesterday, right? And that was great. It was a great time. They was cycling and all that stuff. It was great. But you know what I was paying attention to the whole time? I was paying attention to what everybody was wearing. And what was everybody wearing in the fitness thing that I went to yesterday? They were wearing Nike. You know what I was thinking to myself? I wonder if they got Nike stock. Everybody had on some Nikes. Everybody was wearing a glowed up Nikes and their Nike shirts and their Nike sports bras. And I was thinking to myself, man, I wonder if they actually own some of what they are representing today. They love them some Nikes. The swoosh. But man, what if Nike was paying you? See, I'm gonna do a little I'm gonna do a financial fitness workshop. I'm gonna go target all of these fitness and aerobics and Zumba and cycling and all this stuff. And I'm gonna find out where all the money going. Where is the money flowing? So anyway, Nike's up 11% for the year. Nike Incorporated is an $82 stock right now. Right now. Now, when we ran our investment club in 2016, 2018, Nike was about a $50 stock. Nike did us very well. I told him, I said, wait a second, $50, we need to get some of this. And guess what? We went and got it. We ain't got it. Nike paid us well. 11% for the year. Right? $82.36. All right, let's take a look here. Nike is a $114 billion company. Last year, not so good in growth. Down 53% last year. That's when it was on sale. Last year, Nike was on sale. Earnings growth this year, 9.57%. Revenue earnings growth expected 15% over next 5 years. Revenue growth last year was 6.16%. All right. PE ratio a little bloated. I don't like that. Price to earnings ratio a little bloated. Price to sales okay. Price to book a little bloated. No bueno. All right, keep going. Annual revenue last year, they made $36.4 billion last year. The annual profit last year was $1.9 billion. So that's the profit they made after they paid everything. Right? Their net profit margin was 5.32%. No bueno in my eyes. I don't like that number. Okay. They're in the consumer non-durable sector, apparel and footwear. Their president and CEO at this point is Mark G. Parker. Here are the forecasts from the analysts at $82.36. They're saying, hey, we expect Nike to either move as low as $50 to $5 a share in the next 12 months or as high as 103. I'm not liking where Nike sits at right now. Anyway, here's a profile. Let's take a look at what Nike does. Nike engages in the design, development, marketing, and sale of athletic footwear, apparel, accessories, equipment, and services. It operates through the following segments: North America, Europe, Middle East, Africa, Greater China, Asia Pacific, global brand divisions, Converse, and corporate. When you buy Converse, you're buying Nike, by the way. North America, Europe, all that stuff. Okay, global brands is for licensing. Converse segment deals with Converse. Okay. It was the company was founded in 1964 by William J. Bowerman and Philip H. Knight. Phil Knight. It's headquartered in Beaverton, Oregon. We're going to take a look here at the Nike website. We're going to take a look at their dividend, if they're paying one, which I believe that they are. Employees have increased over the past 4 years until last year, where they did a little decrease, and they fired some people or something like that. I'm going to skip news and charts. Those are things that I would cover if you guys were, if we were really deep diving into this and y'all join the club and y'all want to get this investment education, y'all want to contribute to the group economic movement, well, then you guys will join the club and y'all get more. All right. As recommendations, they're saying buy. I am actually not saying buy. I'm saying hold. I would be a hold on Nike right now, but they're saying buy based off of their February 2019 recommendations. 21 said buy right now, outperform hold. I'm not seeing buy. I'm seeing hold. Earnings per share, this is over the past 4 quarters, and that's real reality. And then the expected over the next 2 quarters, they're saying 39.47% growth. Yeah, they're wearing Converse all the time, probably not even knowing they're wearing Nike. Hey, sales over the past 4 years versus expectations over the next 2 years, they're saying, hey, the investment analysts are saying they forecast 9.57% growth. Sales over the last 4 quarters, versus the expectation for the next 2 quarters, 2.73%. And then sales over the last 4 years. Look at that. Versus the sales over the next 2 quarters, 7.62% growth. So green all the way around. I would actually be waiting for a little dip in Nike, probably to that $75 range if I were to buy. It's worth putting on the watch list, though. We're going to run through the financials real quick, guys, because I know you guys really love it when I talk about money. It's exciting stuff. Hit that like button, that share button, that invite button, that watch party button. We got black folk talking about money in the morning. Hopefully you got at least one black friend or one friend, period. It don't have to be black. It don't even matter to me. If you got one person that's connected to you, think about this. Do you have at least one person that's connected to you that want to talk about money? I mean, my goodness. I mean, you know, we talk about a whole bunch of stuff. We can talk about all the stuff in the news, the Grammys, all this stuff. I'm looking for people who want to talk about money so we can get this guap. It's gonna be I'm gonna tell you, just look down your timeline, look down your phone, be like, oh my goodness, where are the people that I'm connected to that can talk about money? If you can't find any, I invite you to join the Black Billionaires Club. Think about it. Like, oh my goodness, I don't have nobody that want to talk about getting this guap. Net revenues for Nike last year, this is gonna be basically how much stuff they sold. 36.4 billion. We saw that. It cost them about 19.6 billion to do that, with depreciation of assets of 747 million. That left them with a gross income like you get on your paycheck, 16 billion. Before they got to pay their taxes, before they have to pay their expenses. So operating expense, 16.8 billion at the end of the day turned into a net income of 1.9 billion. No bueno. Not for 100, I mean, you might think it's good. I don't think that's good for a $114 billion company. No bueno. Y'all couldn't bring back more than 1.9 billion last year after taxes? Something ain't right to me. I know y'all like, well, we talking about big. Well, yeah, we talking about billions compared to a multi-billion-dollar company. Okay. Balance sheet, what they owe, their assets versus what they own. I'm sorry, what they own, their assets versus what they owe, their liabilities. You have assets and liabilities as well, right? Question is, are you in positive equity or negative equity? Everybody put in console equity. So assets, right? I don't read all that stuff. All I need to know is that total assets, 22.5 billion, is how much stuff they own as a company. And their liabilities of 12.7 billion, which is what they owe as a company, leaving you and I, if we were to decide to invest in Nike, with $9.8 billion of equity that we would be investing into or becoming part owner of if we were to do that. Shareholder equity, 9.8 billion. Not bad. Okay. I found a lot of companies much better than that, though. Cash flow statement. Cash flow statement. Here's the deal, guys. I'm just simply saying, if you're going to wear all that stuff and buy all that stuff and you're going to be Nike'd up from head to toe, sweatpants, socks, shoes, hat, sports bra, your jacket, you're going to do all that and still not own some of the company? Come on now. Wake up, people. Black wealth is a black choice. That's what it is. It's a choice. We choose to spend our money on the stuff instead of choosing to spend our money or invest our money in the stock. Black wealth is a black choice. Net income now, so they only got 1.9 left. That's now what do they do with it? What do they do with their discretionary income? They invest it or they use it to increase cash flow. You can learn something from businesses because you actually run a business yourself. It's called your family. Your family is a business. You have discretionary income, or maybe you don't. I mean, it depends on how you're managing your money, but what are you doing with it when you got it? Buying more popcorn? I'm just saying. At the end of the day, they did all right. I don't think that's very phenomenal. They used some of that money. They got 276 million from it. They did a good investment. They financed, which means that they took out more loans against their equity, down to 4.8 billion. They still got about 396 million cash on hand. Nike, okay. I liked it better when it was $50 a share. I can tell you that. That made me happy. At $82 a share, I'll wait. I'll be patient. This goes on the watch list for me. Okay, so that's Nike, guys. Any questions, man? Is this for those that tune in regularly? Is this stuff starting to make a little bit of sense? Do you think I might know what I'm talking about? I might be a little educated when it comes to this thing called the stock market. I might just know a little bit, just a tad. I'm still working on it. Don't judge me. Please don't judge me. All right. So we're taking a look at our billionaire breakdown, Mr. Francois Pinault and family, who just happens to actually own Gucci, by the way. We took a look at the black-owned business spotlight, Thompson Realty, the 9th largest black-owned business in America, and its CEO, Mr. Warren M. Thompson. We just did a stock market recap from what happened on Friday. We took a look at Nike because I was inspired to do that, and we looked at all these. And as I looked at all these athletes and people they're getting down doing their exercise, but they're doing it in Nike stuff. And I was wondering if they own Nike stocks. So I said, let's take a look at it today. We're supposed to take a look at Home Depot today, by the way. We'll take a look at Home Depot tomorrow. But now, again, hit that like button, that share button, that invite button. Let people know that we're here. You got black folk talking about money in the morning. We talk about what we're not learning in school, but yet we have something for free that we can use across social media, and we can turn social media into wealth media. How many of your friends are connected right now? How many of your friends are connected right now? Think about this for a second, black people. It's a choice. All right, let's take a look at these 10 commandments on retirement. I know some of you guys really need this today. 10 commandments on retirement. It's opinion by Mr. Richard Quinn, February 9th. This was written two days ago. I thought it was a pretty good article. It says here, man, we're faced with thorny retirement issues. Keep Social Security solvent, make Medicare affordable. Many Americans aren't saving enough. We know that. They want to retire early, but they can't reasonably afford to. They're effectively financially illiterate. Now, this is an article for many Americans, not just black Americans. Many Americans are financially illiterate. But it's a choice. So I want to come to retirement. Here are 10 commandments that he suggests. We'll see if I agree with all of them. I'm not sure. I read some of it. If your pre-retirement lifestyle is set with a view to what you can sustain after you quit the workforce, you're likely on track. If not, retirement can mean a sharp drop in living standards. So if your lifestyle, you have created a lifestyle that you feel you can sustain when you quit when you can no longer work or you choose no longer to work, you're probably on the right track. Number 2, he said, remember that Social Security, listen to this, is designed to replace no more than 40% of your pre-retirement income. Now, there's some people think that Social Security is supposed to take care of 100%. That's not what it was designed for. Everybody putting down on design. That's not what it was designed for. It was not designed to take care of 100% of your living expenses. Only 40%. And for many, that 40% is an overestimate because the benefit calculation is skewed toward lower income Americans. In retirement, you'll want some steady sources of income. Everybody put accounts so steady. And Social Security is probably the most secure, but recognize that it's intended to be a minor part of your total income. Social Security is supposed to be a minor part. It's supposed to be one of your streams of income, not the stream of income when you retire. So you'll want some steady sources. That means steady multiple streams of income when you retire. Better get started now. I recommend it. Get started now. Can't wait till you retire to start thinking about retirement. I don't suggest that at all. That ain't no good. Number 3. Have a financial and estate plan. Now, we talk a little bit about financial plans, right? You have a plan to attack. Now we talk about the estate plan. That's what your estate, that's what you're going to leave to the next generation, to whoever, somewhere. That's telling people what to do with your stuff when you no longer can do something with your stuff. When you gone, what do you want other people to do with your stuff? So this provides for your spouse and any others who depend on you financially and who may outlive you. Income annuities. investment income streams, and life insurance might all be a part of that plan. Everybody put in console plan. 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 You got a plan to win. Or you subject yourself to failing financially. Starts with a plan. I can help you with that plan. Of course, my services cost money. I don't do stuff for free. Well, I do stuff for free because I'm doing this for free. But I'm just saying, you got to pay me for my services if you need some help. But I recommend you get some help, even if it's not me. Get some help. If you need some help, get some help. I mean, we are basically offering you, we're basically saying, hey, you can join our club for as little as $10 a month and get the help you need. But you know what? That Starbucks coffee is way too important than your retirement. That Chick-fil-A biscuit is way too important than your retirement. Some people do. Most people don't. Guess what? I'm okay with that. Number 4, never forget that the non-financial aspects of retirement are important too. Think about any significant relocation loan before you retire. And consider trying it out first. It's a big mistake to think of retirement purely as leisure time. And remember, when it comes to the fun stuff, that takes money. Number 5, pay attention to communications from your employer, Social Security, Medicare, personal advisor, and others. What you don't know, what you don't know can hurt you. A missed deadline or any number of other goofs can do severe financial damage. What did you just say? You still have to pay attention. Everybody put console, pay attention. Still have to pay attention. Do not neglect. Pay attention. Number 6, put retirement savings ahead of other goals. He's suggesting that you put your retirement as a priority. It needs to become a priority. It needs to become a priority. He's saying, but make it a priority ahead of college, ahead of your vacation home. Unless you have a good pension plus Social Security is mostly up to you. Everybody can go, if it is to be, it's up to me. And there are no second chances once you get old. You don't get a do-over. It's no do-over when it comes to your planning for your retirement, to be able to afford your lifestyle when you can no longer work. There, you don't get a do-over. If it is to be, it is up to you. Take full responsibility for your money or suffer the consequences. Number 7, save as much as soon as possible. You can always reduce your savings later. Investment compounding really is powerful. Load up on savings early in your career. Let the money work for you in the decades that follow. When money gets tight, such as paying for the kids' college, you may need to trim savings for a few years. But if you oversave during the first 10 years of your career, you will likely still reach retirement in good shape. Oversave early. Now, you got to teach your children when they get their first job to make retirement a priority. They 21 years old and they supposed to make retirement a priority for some 25, 40 years later. Number 8, recognize that your taxes may not be lower during your retirement. Go against some people's thinking, some people's teaching, which I don't understand. Taxes are at an all-time low right now, but you still say taxes are high. Well, wait the 5 years, 10 years from now and see what happens. And you're going to be really complaining then. All signs point to higher taxes in the future for everyone. All signs point to higher taxes. You can't, if they're all-time lows, then they're more likely to go up than they are to go down. By the way, this is why I don't listen. This is why I don't have conversations about money to people who don't know about money. Because what they are doing is regurgitating what they don't know. And they hope that whoever told them has the right information. Monkey see, monkey do. But when you get around people who study money, whole different conversation than people who plan money. I don't play money. I study money. And then I execute on what I study. There's a difference. A lot of people are playing money. I'm trying my best not to go there today, but a lot of people are playing money. And they're getting people to follow them. And guess what that is? The blind leading the blind. Good book says this. It says, when you want to know about jewels, go to a jeweler. When you want to know about meat, go to a butcher. You don't go to the jeweler to talk about meat. And you don't go to the butcher to talk about jewels. Well, who are you going to go to talk about money? You damn sure don't go to, oh, let me not say that. I'm getting myself in trouble today. So he says reduces retirement tax bill. He favors Roth accounts and municipal bond mutual funds. Mutual funds. We talk about that. We'll talk about that in the investment club. Number 9, you want to place healthcare high on your list of fixed expenses. Medicare plus supplemental insurance can cost a retired couple more than $700 a month. Even if you're fortunate not to need much medical care, those premiums are a big monthly hit and they'll grow each year. Prescription drugs can also be a large expense. What if you aren't so fortunate? Remember that Medicare has no out-of-pocket limits. Number 10, invest. Everybody putting console invest. Invest in ways that will provide a steady income stream in your retirement. This is why I recommend a retirement review. This is what the retirement review is actually my first service that I offered when I went into business for myself. I realized that people had no idea what to do with their money so they could retire comfortably. So I started a service teaching people about what they didn't know about money, helping them to review and then also to adjust so that they could do better with their retirement accounts. That's how I got started. That was my first business. I still do them, by the way. I just don't talk about it as much. If you need help, get help. Stop playing when it comes to your money. You better take it seriously. I recommend it. It's a serious subject. In many ways, retirement is no different from your working years. You want a steady flow. Everybody putting down so flow. You want a steady flow of income. Do not be totally exposed to the stock market fluctuations. You don't want to worry about where that 4% withdrawal rate will come from each year. So this is called what we would consider to be financial strategy. Got a plan that has a strategy that you can execute to ensure that you retire rich, wealthy, able to take care of yourself. You don't have to depend on other people to take care of you. Because what? Because you took your money seriously through your working years. Okay? So hopefully, you got something out of it. I thought it might be something for those. I'm not quite sure who we're talking to today. But we want to make sure that we cover things that will be useful to you as we are serving the greater community at large. The comments below, share something with us that you learned today here on the Money and Power Show. You know, we don't do this just to do this. We do this to make a difference. I made a decision a long time ago. I was no longer going to do stuff just for money. I was going to do stuff to make a difference, to make an impact in my community. And I just happen to be the financial guy. I happen to be the money man. And so I want to teach. That's my goal, to teach people about money. I want to bring a money school to our community. How do I do that, though? How will I do that? It's going to take the help of all. Right? I understand that together, everyone achieves more. I can't be the only one that wants a money school in our community. I just might be the visionary. So you might be saying, well, what can I do to help? Well, become a member. That little $10 that goes towards it, every little bit helps. Every little bit adds up. Buy a book. Do something. If that's what you want, you say, hey, I want that as well. I'll make a contribution. Well, do that. And together, we'll win. All right, today, guys, we got black folks talking about money in the morning, man. We have broken down a billionaire, Mr. Francois Pinault, who just happens to own Gucci, by the way. He was a high school dropout. He's the 30th richest man in the world, according to Forbes. We went over black-owned business spotlight, Mr. Thompson Hospitality, the 9th largest black-owned business in America, with black CEO Warren M. Thompson. We did a stock market recap. We also looked at we dug into the Dow. We looked at Nike. And then last but not least, we covered an article on the 10 commandments of retirement. I hope that you learned something today. I hope that you hit the like button, the share button, the invite button, the watch party button. I hope that you cared enough about your brother and sister who might be struggling right now, and they needed a show like this to help them to build some confidence, to know that there's a black man that's trying to help them with their money. And guess what we can do, guys? We can do it together. Well, I'm ERGJ, certified financial educator, CEO of ERGJ Enterprises, ERGJ Black Bazaar, and international best-selling author of the book, The Black Billionaires Club, a study of black wealth, a study of the 12 richest black people in the world today. And I invite you to join the Black Billionaires Club today. For as little as 33 cents a day, who knew? 33 cents a day that I choose to invest so I can invest it back into myself could be the thing that changes my financial life forever. Would you trade $10? Would you trade $10 for the best of the rest of your financial life? Guess what? Most people won't. I just hope that you're not like most people. Either way, I'm okay with that. Well, guys, I want you to remember this, that it takes a village. And it starts with us. Let's build wealth, people. Let's build these businesses. Let's build our bank accounts. But most importantly, let's build each other. And let's do it together. We all we got. But guess what? That's enough. Now, I pray to God preserve each and every one of you today. As you go out, you'll understand. You'll begin to take steps to make retirement a priority. Till next time, Mr. DJ, hit the music.
The new Black Wall Street. Thanks you for joining the show. We gave a lot of great tips, but it's time to go. Take the knowledge we shared, hope you use it and grow. We will see you all there at the next episode of The New Black Wall Street. The New Black Wall Street.